Ladies and gentlemen, good day and welcome to Crizac Ltd 3Q FY26 results update. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask a question after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gaurav Gupta. Thank you, and over to you, sir.
Good afternoon, everyone, and welcome to Crizac's Q3FY26 earnings conference call. We have with us Dr. Vikas Agarwal, Chairman and Managing Director of the company, Mr. Manish Agarwal, the Chief Financial Officer of the company, and Mr. Christopher Nagel, Chief Executive Officer of Crizac UK. Christopher, sir, if you can start by giving your overview on 3Q FY26 performance, as well as outlook for FY26 and beyond, and then we'll open up for Q&A. Over to you, Christopher, sir.
Thank you, Gaurav, and good evening to everybody. Greetings from London. I'm Christopher Nagel, CEO of Crizac UK, and delighted to be speaking with you today. So over the past year, we witnessed what was a transformative moment for Crizac with our IPO in July 2025. And, this was a validation of not just our business model, but also everything that we've been building since our founding in 2011. Today, I'm pleased to report that the momentum we've generated has carried through this quarter with significant results that underscore the global demand for quality student recruitment solutions. For context, Crizac operates at the intersection of an expanding global education market and persistent inefficiencies in international student recruitment. We serve 350 students. We have more than 14,000 registered agents on our platform, and we've processed more than 10 million student applications across more than 80 countries. Our scale is not just an accident. It reflects the genuine problem that we're solving for universities and education agents around the world. In Q3, we delivered revenue growth of 28% year on year, which means that we reached 278.6 crore rupees in revenue. This performance reflects both organic momentum but also strategic investments we've made in emerging markets across Latin America and other continents. Our EBITDA margin of 23.19% demonstrates the operating leverage inherent in our asset-light and tech-led model. This really is crucial. We're scaling up application volumes without proportional increases in fixed costs or headcount, which is precisely the dynamic that drives our sustainable margin expansion over time. Something that particularly excites us is the diversification of our sourcing base. India remains our dominant market with about 50% of application volumes, but we are seeing accelerating growth from Asia, excluding India, and extremely robust expansion in Africa. This geographic diversification reduces our dependency on any single market and positions us for resilience and global growth. Our recent acquisition of Studies Planet Limited and the launch of our accommodation facility platform represent strategic expansions into adjacent services within the international student journey. We're not simply connecting students with universities, we're really building an ecosystem that supports students throughout their entire overseas education experience. These moves enhance our value proposition to both institutions and to our agents, and they create additional revenue streams with the same high operating leverage. It's worth emphasizing as well the continued strength of our balance sheet. Crizac is still entirely debt-free and fully self-funded. Every ounce of growth that we've achieved over 15 years has come from internal cash generation. This capital discipline has been and is foundational to our success, and it provides us with significant strategic flexibility to pursue growth opportunities without constraints. Looking ahead, we're focused on 3 strategic imperatives. The first is deepening institutional partnerships in developed markets like the UK, Canada, and Australia, where we've established strong footholds with leading universities. Second, continuing our penetration of emerging source markets, where we see substantial untapped potential for student mobility. And thirdly, enhancing our service offerings to capture a greater share of the international student value chain. Our team of 350 permanent employees and consultants across the UK and India brings together domain expertise, technical excellence, and operational discipline. The leadership team shares a clear vision to establish Crizac as the trusted digital backbone of global student recruitment. We strongly believe that the international education sector is structurally undersaturated with technology solutions that genuinely improve outcomes for all participants, and we believe that we're at the early stages of capturing that opportunity. Our platform has achieved product market fit, our unit economics are strong, and our growth trajectory is accelerating. Thank you, and with that for context, I'll hand over to our Chairman and Managing Director, Dr. Vikash Agarwal.
Thank you, Christopher. Good evening, everybody. Thank you for being a part of our investor call. As Christopher mentioned, this quarter reaffirms the strength of Crizac business model, execution, discipline, and long-term growth strategy. International market is very large but segmented and still at the early stage of digital adoption. Crizac brings that trusted digital infrastructure for global student recruitment. We provide university with access to quality controlled application, global agent network, and enabling agent with a faster turnaround time, transparency, and a connection access to premium institutions. These improvements translate directly into higher efficiency, better outcome, and scalable economics. Last year, roughly 7.6 lakh students went abroad from India. If we talk about global student mobility, that number is 80 lakhs. Our current scale represents only a small share of that highly fragmented global market. This provides a long runway for growth. Each new agent, institution, and geography added adds incremental revenue with attractive margin, supported by our platform-driven operating model. As Christopher mentioned, we continue to scale across high-value developed markets like UK, Ireland, Australia, New Zealand, while expanding into multiple source markets, including Asia, Africa, and now Latin America. Crizac is a technology-led asset-light platform operating in a structurally growing market. This is not short-term or cynical growth story, but a scalable business model with defensible advantages, strong unit economics, and clear visibility for long-term value creation. With that view, now I invite our CFO, Mr. Manish Agarwal, to take this financial performance and outlook.
Thank you, Dr. Vikash. Good evening, everyone, and thanks for joining the call today. Myself, Manish Agarwal, and I'm pleased to share you the financial performance of Q3FY26. With a revenue of 278.63 crores, we were able to deliver a PAT of 50.52 crores, which is a margin of around 18%. This result demonstrates strong execution, operating leverage, and consistent profitability. Our business is seasonal in nature, typically because of the admission cycle. Q3 is our strongest quarter, driven by the peak international student recruitment. Our commission-based asset-light model support high margin and strong cash conversion. Costs scale largely with the volume, while employee expenses have grown modestly, highlighting the operational efficiency. We continue to generate healthy operating cash flow with minimal working capital need. This has also helped us in announcing our first special interim dividend today. We delivered a profit of 155 crores in FY25, and based on the current trend, we are well positioned to exceed this performance in FY26. Most of our growth is organic and sustainable. We expect a normalized EBITDA margin of around 23 to 25%, supported by scale benefit and platform leverage. Our priority remains to reinvest in technology, key market, and strategic opportunities. Over time, we also intend to return the capital to shareholders as the business matures. Thank you. We are now open to questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Samad Patel from Please go ahead.
Yeah. Congratulations on great set of number. I have 3 questions. First one is that at large UK partner universities where we already contribute, let's say, a significant part of their intake, now the growth would be driven by market expansion or wallet share gain from the other players? That is my first question.
It will come from both the things. We expect to gain market share. As mentioned earlier, our market share, if you look at across the globe of the students we send to our partner university, it's less than 1%. Can this market share grow further? Answer is yes. So we expect market share to grow. At the same time, because of revenue, because of scale in volume, we expect a better revenue per student basis as well.
Understood, sir. That was really helpful. Now, my second question is, are there any regulatory development across our key geographies that we should be closely monitoring over, let's say, next 6 to 12 months, which can impact our volume growth positively or negatively?
I mean, all the news are normally baked in our forecast. We believe some of the news, for example, FTA with Europe, which came yesterday, all these are very positive. We believe the numbers, because of these impact, and again, FTA was signed with New Zealand as well. So there are a lot of positive development which is coming up. And as far as student global movement is concerned, even though these regulations makes a big impact, but over the long time, you'll see that student destinations are fungible and they choose a destination which is more attractive and easy for them to get visa and see a better return on investment. So any regulations and other things which are coming out at the moment, either those are already baked in or are coming quite positive.
Understood, sir. That was really helpful. Now, my last question is on Global Tree. So how do Global Tree's unit economics and margin profile compare with Crizac's existing business? Any particular flavor which you can give us on margin and unit economics? That would be really helpful.
Hi, Samar. This is Manish. Global Tree is a B2C company, whereas we are a B2B company. Our margins are relatively smaller compared to a B2C company. So in terms of margin of Global Tree, we expect it to be around 50%. We acquired that company on 6th January. So in the fourth quarter, you will see the consolidation and revenue coming in to our P&L account.
Understood, sir. That was really helpful. That's it from my side, and I will get back in queue for further questions.
Thank you, Samarth.
Thank you. The next question is from the line of Aman Banerjee from Crizac Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yes.
Yes, sir. So my first question was on our
And we lost you.
Sorry to interrupt. Requesting Sir Aman to please rejoin the queue while you have been disconnected. We'll move on with the next question. The next question is from the line of Gaitav Shah. Please go ahead. Sorry to interrupt. The line of Gaitav Shah has been disconnected. We move on to Savicha Jain. Please go ahead.
Hi, sir. Thank you for giving this opportunity. I have a couple of questions. First is, sir, can you tell me how many applications were processed in this quarter? And in this, how many applications were processed mainly for UK, then for Canada, and then Ireland, and then for other countries?
Hi, Savita. We did around 1.2 lakh applications
in this
quarter.
Okay.
Okay. Almost 50% came from 50% for India, or you can say 50%. 90% were for UK, and rest were for other countries.
Okay. And also, in the other expense have shot up, and you've also mentioned this was for professional fees and then one more line item. So if you could help me understand, what this professional fees was incurred towards. I assume this was a one-off kind of an expense. This was incurred in this quarter. If you could just elaborate a little bit on this.
Sure. Our quarter 3 FY26 other expenses are on a higher side because we engage lawyers, consultants for due diligence and other things for acquisition purpose.
Okay, understood.
We also engage consultant for IT securities purpose who can audit and check our system integrity so that we are on a safe zone. This has led to increase in the professional fees.
Understood. And sir, would you be able to give us the revenue and the profit for our subsidiaries such as Global Tree Careers, the Studies Planet, and the UCall FCD, sir? Is it possible for 9-month FY26?
Global Tree we acquired on 6th of January FY26. Yeah. So that has not been consolidated. Nothing has been recorded in the books yet for Q3 financials.
Okay.
Coming to the other standalone companies, we acquired StudyPlanet.com Limited, which is a Latin American-based company. Their revenue was approximately 1 CR, and almost 50% has been, since we acquired 51% has been booked in our account, and balance as a minority interest.
Right. And you call, sir?
Just a second. Savita, is it possible I'll get back to you on this?
No problem.
I don't have that detail handy with me right now.
Yeah. So just one more question and I will rejoin the queue. So you mentioned that, we plan to get into the accommodation services and financial assistance services. So what exactly do we plan on this, and by when do we plan to launch these services? Could you just broadly explain what are we planning to do in these two offerings?
Sure, Savita. We have already launched the accommodation as a service in our platform.
Okay.
By this, we are helping our agent and the student who wants to study abroad to choose the accommodation of their choice in and around the universities they propose to study.
Okay.
We have done a tie-up with multiple state agents across the globe, where we refer these students to them. They, once the student has selected the accommodation, they lock the accommodation for those students, and we get paid as a brokerage of 2 to 4 weeks of the rent for the referral we have made.
Okay. Okay.
Hi, Savita. I've got the details. Our UCall FGD subsidiary has a turnover of 10.73 crores in Q3, and Study Planet has 1.87 crores of the revenue.
Okay. And so the accommodation services, where have we launched? Which geography have we launched this right now? For UK, I believe?
No, we have already launched for UK, Ireland, USA, and we are looking at launching for Australia and other destinations.
Okay, and how much revenue have we booked in this for Q3? How much?
It's a very negligible revenue because it's just started. It will take a bit of time for it to become more popular with students.
And on the financial assistance side, what are we planning to do? Are we planning to tie up with the education loan NBFCs? Are we planning to refer students to them? What exactly we are planning to do there, sir?
Yeah, we have already tied up with many of the education loan agencies, where we will refer the students to them, and we'll get a referral fee from those NBFCs and banks.
Okay. Thank you, sir. I'll rejoin the queue. Thanks.
Thank you, Savita.
Thank you. The next question is from the line of Aman Banerjee from InCred Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question was with our UK geography. So we might see some rules getting stricter and some rules, new rules applicable from April of this year. So what's our outlook there? We might see a drop in our applications.
Christopher?
Hi. Yeah, thank you for the question. The major recent sort of change or news item for the UK market was the launch of a new international education strategy from the UK government. This was basically a very positive announcement. The government put in a new and much higher target to boost its international education exports to £40 billion a year by 2030. And they also put a target for universities to diversify their source countries for students much more. So obviously those two things suit Crizac very well, that there's an ambition for the market size to grow, and there's an ambition to diversify geographically from source market, which is a big strength of Crizac's. That's the main sort of update in terms of regulation from the UK. As well as that, there's, increasing focus and awareness in the government as the industry expands and the market expands. Increased regulation around agents and more rules is a benefit for Crizac, just because it raises the barriers to entry and entrenches our position as one of the largest senders to the UK.
Got it. That was very helpful. So, second question was, sir, that we are seeing a trend change, in terms of students as their destination country. We are seeing a lot of new applications towards Canada. So, but, we are not at all there in that market. So are we planning to start anything there?
Yes, Aman. We are adding institutions and universities in Canada as well. Though, having said that, UK is still by far the most popular destination for the students going abroad. But yes, you are right. We are adding other destination institutions in our portfolio.
Okay, sir. Okay. Thank you so much. Thank you.
Thank you.
Thank you. The next question is from the line of Gaitav Shah from Anand Rathi. Please go ahead.
Krupaya line पर रहा. The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से
We'll move on with the next participant. The next question is from the line of Madhur Rathi from Counter Investments. Please go ahead.
So firstly, since we have a over-dependence on UK market, and I think the previous speaker also alluded to this, the fact that visa approvals might be hard to come by, especially in case of change of government in UK and Reform Party coming in power, if at all. And so secondly, now what will it take for us to break into new geographies like Canada and Australia? And in fact, the macro environment for visa is getting tougher in all of these geographies. So is that a major headwind for us going forward?
Christopher?
Yeah, thank you for the question again. I think in the UK, just to comment on the government situation, the next election is not for more than 3.5 years. So we're not really sort of anticipating too much change in the near or even in the medium term. Our strategy is never to try and predict politics or geopolitical changes. Our strategy is to de-risk through diversification globally. It's true that our strength in the UK obviously gives us a dependence on the UK, and that's reflected in the numbers at the moment. We're working aggressively to expand, to diversify on the destination market side. This, we believe, is going to be done more efficiently through inorganic growth, and it's a key pillar of our M&A strategy going forward.
Sir, and what about what's our strategy to break into newer markets like Canada, Australia, etc.?
I mean, as Christopher said, we are looking at adding into different destination markets like Canada, New Zealand, and Australia. Any acquisition what we make, for example, in this quarter, we've acquired Global 3. That has brought few Australian contracts to our kitty. We expect few other acquisitions which we are already talking should bring more and more universities in those destinations you have mentioned to our kitty, and we should be able to diversify and recruit for those destinations in coming future.
Now, sir, what is our market share with the institutions in UK? Like, I mean, are we the single source supplier to them, or they have multiple platforms like ours?
I mean, most of the universities work with multiple platforms like ours. Right.
And now, for example, if we need to enter Canada, so I mean, is there some cash burn that we will have to, to penetrate the market, or is it that our